Assalamu alaikum. This is Sir Zeeshan Malik, teaching at Tafsal College. Today, I am going to pick a topic which is very much important and askable in exam. This is company accounts. Company, how it differ from other type of form of businesses like sole trader and partnership. And now we are focusing on company accounts. Company as a theory is a separate legal identity. In sole trader and partnership, they are unlimited, whereas company is limited. The shareholder's liability is limited. Number two, taxation is to be applied on company's profit. Whereas in sole trader and partnership, taxes are not applied on company's profit, it is applied on individual's profit, like partner's profit and owner's profit. Whereas in company, profit taxation is applied on the profit earned by the company. When it is distributed to the shareholders in the form of dividends, then the tax is applied on the individual earning of the shareholders also. So two taxes on company. Over here, in sole trader and partnership, taxes are not allowed to record. But company is liable, responsible to record taxes in their accounts. It is called corporation tax. So my focus in this video, how it differ in accounting when preparing accounts, how it differ from other form of business. In sole trader, we prepare income statement and a statement of financial position. In partnership, we prepare income statement. Then for the distribution of profit between partners, appropriation account, current account, and at last again a statement of financial position. Over here, another statement is added called a statement of changes in equity. Statement of changes in equity. With parallel of your income statement and statement of financial position, we are supposed to prepare this new statement, which is only and only prepared in company accounts. It does not exist in sole trader or in partnership. We have to focus it more. We have to emphasize on this statement more. So, before going to elaborate in equity part, a statement of changes in equity, I want to explain this term, equity. What does it mean in company accounts? Look, the financial position. Look at the financial position. Same, non-current assets, current assets, the total, it is the same as we prepared in sole trader and in partnership. But in company accounts, the lower part, the capital part is changed. Non-current liabilities, same. Instead of loan, it's become debenture. And current liabilities will remain same. But the change item is capital. Instead of capital, we say shareholders equity. Shareholders Holders' equity. Equity, that is the capital invested in the business. So I'm going to tell you how many items can be put here. Ordinary share, preference share, share premium. These were two capital. Ordinary share capital, preference share capital, and now reserves, share premium, revaluation reserve, I want to explain each and everything in this video. Look here, these are the capital called share capital. In company, there is not only one person investment, so many people make investment in the business. So many people. So we call it share capital. So many people invested the capital. It's called share capital. So there are two forms of share capital: ordinary share capital, preference share capital. Now, rest of the items are reserves, and these two are capital reserves. And the rest two items are general reserve, retained profit. These two are revenue reserves. So it is the total equity item. Total equity items 6. These are the capital, and these 4 are the reserves. Capital reserves, revenue reserves. Capital reserves are created by law. You cannot create it yourself. Law says whenever share is issued more than the par value, whenever the shares are issued more than the par value, the excess amount is called share premium. The excess amount is to be transferred to share premium account. And the other item, revaluation reserve. When the property or building value increases, any non-current asset value increases more than the book value, the increase, the new value and the book value, new value of the asset and old net book value of the asset, the difference is called revaluation reserve. The difference amount will go to the revaluation reserve. You have to do it. In company, you have to do it. You have to follow the rules and regulation. According to company law, you have to follow the rules and regulation. So they are the rules. By law, you have to make it. Whereas these revaluation reserve, so the general reserve and retained profit, these are revenue reserves created by the will of the company. जितना मर्जी है कंपनी उतना बना सकती है. ये कंपनी की अपनी मर्जी से डेवलप किए जाते हैं. रिटेन प्रॉफिट इज अ पार्ट ऑफ प्रॉफिट. कितना अमाउंट आपने डिविडेंड देना है, कितना अमाउंट आपने जनरल रिजर्व निकालना है, कितना अमाउंट आपने प्रॉफिट का बचाना है, ये कंपनी की अपनी विल है, कंपनी के अपने प्लान्स हैं, कंपनी के अपनी पॉलिसी होती है. हाउ मच दे वांट टू गिव द ऑर्डिनरी डिविडेंड्स, इट इज डिसाइडेड बाय द कंपनी डायरेक्टर्स. Those who managing the company's affairs, company's resources, they have to decide. So general reserve bhi, retained profit bhi, they both are revenue reserves which are created from the will of the company. I am putting the heading again, statement of changes in equity. It is prepared after income statement. Want to make it dark. statement of changes in equity. Statement of changes in equity. So these are the equity item, shareholders equity. In the company's capital, these maximum item can be put generally as far as A level is concerned. So this statement name is statement of changes in equity. So what are the changes made in this year in equity items? The statement is prepared for equity item and it shows how they change in the year. So in a particular question there may be 6 items, maybe 4 items, maybe 2 items. Whatever the number of items we have in equity section, we have to make the column here, like ordinary share, preference share, reval share premium, revaluation reserve, general reserve, retained profit, and at last we are supposed to make the total. So if there are only 3 items, make 3 columns here. If there are 5 items, make 5 columns here. Okay? So if you got this idea, I'm going to rub it for my format. Now, what's here? First of all, you have to take the balance which is coming from the last year. Balance brought down, coming from the last year. And this is the total. This is the total of these balances. Okay? Next, before going to work actually on it, now income statement. It will remain same from revenue, cost of sales, gross profit, other incomes, expenses, and the last answer is instead of net profit or profit or loss, we have operating profit here. We'll deal with the interest income, add here interest expense called finance cost, or for the time being we are only considering finance cost here. For making it more clear, taxation here, this is profit before tax, then tax. The final answer is called profit after tax. This is the profit which we can take it here in changes in equity. Profit after tax here. In which column we have to take the profit? In retained profit. And of course the same value is transferred here to the total. Okay? Then we have, if any, transfer to general reserve. Transfer to general reserves. Subtract from the profit, add it to the reserves. No impact on total. No impact on total. It is a fund transferred from retained profit to general reserve. Minus on this column, addition in the general reserve column, total effect will be 0. The company plans for the future, so they make or they set aside a sum of money for the future. So they subtract it from the profit and add it to the reserve. It can be any type of reserve. It can be specific reserve like non-current asset replacement reserve. We know after 10 years this premises may be short, so we can make the reserves of it. Alright, so it can be general reserve or it can be specific reserve. Next, from the profit we need to give dividends. Only and only paid dividends are to be recorded. Only paid dividends are to be recorded. As a rule, you have to pay the preference dividend first and then ordinary. They all are to be deducted from the profit. The same from the total. The same from the total. The profit earned by the company, from that profit and the previous retained profit, we have to transfer some of the amount as a reserve and pay some dividends from it. The rest of the amount we may retain for the next year, for the future year. Company generally not give all the profit as a dividend. They save for the future use or for reinvestment in the company or for the expansions of the company. It's a policy. It can vary from business to business, company to company. How much they want to give dividends, how much they have to reserve for the future. Next, there may be issue of shares. If shares are issued at par, only ordinary share will affect it. But if they issue more than the par, then ordinary share and share premium will be adjusted, affected, increase. Similarly, same amount will be added here to the total. There may be a property revaluation. I want to show the maximum items, maximum transactions which may enter here. It's so confusing to the students. That is why I picked this topic to elaborate it further and to get the more clear concept. Issue of shares will increase share capital and share premium. If it is only at par, only share capital will increase. But if it is issued more than the par, share capital and share premium will be increased. Simultaneously, total will increase. Whereas property, if property is revalue, it will affect the revaluation reserve. It will add it over here and to the total also. And to the total also. Okay? You may take the total. We may take the total after this. There may be further transactions I may elaborate later. Alright, the total of this side should agree with the total of this one. And these totals transfer to shareholders' equity. The same values from here, these all values will transfer here ultimately. If we add them, it's hence balanced. The ending values, it's called balance carried down of the values like ordinary share, preference share, revaluation reserve, share premium, general reserve, retained profit. The ending balance will transfer to there. It got balanced, inshallah ta'ala. More transactions. Look, bonus shares. Add in share capital, subtract in share premium. Or it can be from a revaluation reserve. If they are finished, they can be used the reserves. So, I wanted to show you maximum at maximum. First of all, again start from here. If we start from the very scratch, the question will start from income statement, gross profit, other income, operating profit, finance cost should be subtracted, interest, then taxation should be subtracted. Then remaining amount of the profit will drag here, profit after tax. And these columns are to be decided from the equity. If you have only 3 items in equity, make 3 columns, because its name is statement of changes in equity. तो जो भी आपके पास शेयर होल्डर इक्विटी में आइटम्स गिवन होंगे उतने ही आप यहाँ कॉलम्स ओपन करोगे, उन्हीं की चेंजेस को आप एक्सप्लेन करोगे. There may be some points in adjustments also, so you may see in the question. So open maximum item whichever you have. I have written down over here total maximum 6 items. Brought down, profit, transfer to general reserve, dividends paid to the owners, shareholders, issue of shares, maybe public issue or right issue. Bonus issue will add here and subtract from here. Reserves minus करते हैं, share capital increase करते हैं, bonus shares free of cost होते हैं, no cash involved, they are created from the reserves. So reserves minus हो रहे होते हैं, capital add हो रहा होता है. Property revaluation, land and building revaluation increases, they will be added here, and these total will transfer here. Alright my dears, so attempt maximum questions of company. This is a brief description of the topic. Inshallah it will help you out to tackle it, both for AS and A2 level. Thank you very much. See you soon.